Welcome to this webinar where we are going to be talking about investment opportunities in Saudi Arabia's renewable energy sector. There are lots of exciting opportunities coming up, I think. And if we pop to the next slide, I'll just introduce who we are when I say we. So part of the Pöyry team, or Peru team, as we would say in Finland. Of course, now, as I'll go on to describe, really part of OEF Peru. But leading most of the discussion today will be Brendan Cronin. Brendan is based in Dubai and he heads our Middle East region. And next to Brendan is myself, Matt Brown. I'm the Vice President of Management Consulting. And I look after the management consulting part that covers the Middle East amongst some other geographies. And you can see there both mine and Brendan's experience. And then also on the line we have Mansour as well, who's a business development manager based out of Riyadh, and a lot of experience on the engineering side and also helping us on the management consulting side as well over time. We've been working in Saudi for many years on some of our biggest projects, especially on the engineering side, and also, I would say, on the management consulting side, have been in Saudi over the years. So Saudi is a really, really important market for us. If we just pop to the next slide, please. Then just to say a little bit about OEF Peru, in case you are unaware that we've merged Pöyry, which was a Finnish entity, with OEF, which was a Swedish engineering business, now listed OEF Peru on the Swedish Stock Exchange. We have now 17,000 devoted experts who bring all of their skills and experience. We can cover the entire value chain. We're present in more than 50 countries globally. What's very interesting for me in the coming together of these two businesses is that OEF had a very large, around about 1,500 digital specialists, IT specialists, working across all sorts of areas of digital technology. I think that's really going to benefit what we're doing there. And we can, bring all of that experience across automotive, energy, process industries, infrastructure, to bear. Of course, today we're going to be talking about energy and in particular renewable energy. And so with that, I will hand over to Brendan.
Okay, thanks, Matt. So let me just move on to the next slide. So as Matt said, we're very excited about the electricity sector in Saudi Arabia, particularly the prospects for renewables. So I want to take you through in the next kind of 20 minutes or so, what's happening and what the outlook is. So I think the first section is just to talk a little bit about the fundamentals. And Pöyry does a lot of modeling of supply and demand. So we thought that we'd start by just looking at how the sector might evolve in the future years from a supply demand point of view. So we maintain cost assumptions for all the technologies, and we make them specific to Saudi Arabia and the specific conditions we see in Saudi Arabia. And when we look at costs of energy, we see that especially when you think about things on a kind of international market price for gas and coal netback, when you think about things on an unsubsidized basis, which is very much the direction of travel in Saudi Arabia, then you find that wind and solar PV look, by far the cheapest source of energy. So, under our assumptions, we get around about $20 a megawatt hour for wind and solar PV. These are not directly comparable to tariff, tender tariff levels, but and we've also seen when there has been tenders that they have been in the low $20 a megawatt hour for energy prices, and that's really the primary driver of renewable development in Saudi Arabia. Is the fact that with this price level we're seeing for renewables now, that they can free up gas, particularly for other uses and potentially in the future for export. And they can reduce costs in the sector. So it's really seen as such a strategic sector. I think there's been, over the last 8-10 years, a number of false starts in Saudi Arabia on the renewable side. But I think, this time for me is different because, the costs are so much lower now, and, the fundamental economics is, that there's real cost savings to be had. And even this week we've seen that the Saudi Industrial Development Fund have announced kind of quite large loans for both renewable IPPs, but also for the component manufacturers as well. So that really demonstrates the government support for the sector going forward. So we see, a huge amount of investment. Saudi's a big market, the biggest market in the region. Peak demand currently almost 60 gigawatts, and will grow. We see about 270 gigawatts of investment in the next 30 years. A big focus on solar, given its kind of low cost of energy, but also kind of wind, because wind has a very good fit with the profile of demand. So we see quite a significant amount of wind being developed also. So definitely also still some CCGTs, and then in the longer term we see batteries as a way of managing the variability from wind and solar PV. I think this slide for me is extremely interesting and demonstrates maybe some of the longer term challenges. So it's it's 20 years out into the future, but you can see that there's large, the large variability in wind and solar is going to mean that the nature of the generation dispatch is going to be highly variable. So you can see that, solar and wind are varying across the day, and at some points are actually meeting demand without a need for any other sources of generation. And you can actually see on day 4 that you can start to see the solar peak is being curtailed. So actually you're seeing curtailment of solar, even with the storage that we see on the system. So we have almost 20 gigawatts of storage charging and discharging, but even still getting some curtailment. But it demonstrates the fact that I think in the medium term, renewable integration is going to be a major challenge, going forward. So, how in Saudi Arabia are all these renewables going to come forward? I think that's obviously the question for renewable investors and developers. So it's worth kind of starting by saying, today the power sector in Saudi Arabia is largely government dominated by government-owned organizations. So Saudi Aramco as fuel supplier, and then the major incumbent is Saudi Electricity Company, who owns a large section of the generation and also owns and operates the transmission grid and also distributes to final consumers. But there are plans underway to increase private sector participation. There's plans to move, to unbundle Saudi Electric Company and also move the power procurement company to the Ministry of Finance directly rather than owned by SEC. And there's also, a very clear direction now that, going forward, all new power projects are going to be, led by the private sector. So IPPs are very much the way ahead, and it's how projects have been tendered in the last year, and how they'll be tendered going forward. So even though today we see relatively small amount of private sector participation, there's a very firm support for the private sector going forward, and the tenders that have been run already have been very successful. So the routes to market for renewables, so there's a number of potential routes to markets. We've listed 5 here. I think the major focus is what we call the Repto tenders, so the Renewable Energy Project Development Office that was set up, and we'll talk a little bit more about that. That route to market is well established for utility scale projects, and is using a well understood kind of IPP structure that's used across the region. And there've been two successful tenders that have been run to date, and we'll come on to talk a little bit more about those. But there's a couple of other ones that are worth mentioning that are increasingly kind of interesting. I think particularly the one that's kind of most tangible perhaps is the private PPA options. So the regulator has started to allow large customers to contract directly with renewable developers by paying a use of system charge. So the regulations are there for that, but I don't think have really been tested yet. But there are projects underway. SABIC have announced a project, and others are looking at it. And I think once that framework gets kind of established and tested, that it will be an increasingly attractive option, and we're going to talk a little bit more about that also. The other routes to market, net metering, mainly for small scale generation. There's an ambition for the PIF which is the Saudi Sovereign Wealth Fund, to partner with an international manufacturer to bring in-house, bring in country the wider PV supply chain particularly, but that hasn't in the last kind of 3 to 6 months moved forward, but we would expect it to in the longer term. And the other final point that's worth saying is that there has been some discussion about a wholesale market in Saudi Arabia, and ECRA, the regulator, are looking again at that. But again, I think that's more a longer term kind of initiative that we would expect to see rolled out maybe in the next 5 or 10 years. But given the size of market in Saudi Arabia and the interest that ECRA have displayed, that is a definite potential in the longer term for there to be kind of a fully traded, liberalized spot market for electricity. So I think what I'd like to do in the kind of remainder of the discussion is to focus on the two routes to market that are kind of closest, or kind of either live in the case of Repto, or are kind of in the process of development, and focus on those for the remainder of the discussion. So what
Brendan,
is?
if I can just stop you there a second, just to say, I forgot to say at the start that the people can submit questions at any time through the question panel, which we will come to at the end. So if, as you were going through, anyone's got any questions, then please just type them in, and we'll deal with them at the end. Thank you.
Yeah, cool, no problem. Thanks, Matt. So I think Repto is definitely the driving force behind the renewable energy development that we've seen to date in Saudi Arabia, and I think it's been very successful. It's using a model that is the IPP model that is being established across the region, and it's applying it to renewable electricity in Saudi Arabia, and it's using a structure that's well understood and by investors and by lenders, and therefore is able to bring projects forward at quite low prices. So Repto was established in 2017. It is focused on utility scale projects, and it is expected to deliver about 30% of the capacity target that has been set by government, and they have an ambition of 60 gigawatts by 2030, with Repto delivering 30% of that. So upwards of almost 20 gigawatts of capacity could be procured by Repto. The structure that use land sites are identified by Repto, and a lot of the pre-development is undertaken by Repto. So the projects come with confirmed land, with confirmed the required consents. And those individual sites are then put to tender, and developers bid to develop a project on that site, and for which they receive a PPA, a long-term PPA, for 20 to 25 years. It's worth saying that local content requirements are a major focus, and making sure that a significant quantity, I think it's 17% in the upcoming round of the overall capex spend is spent in country, and that is going to increase in the later tender rounds. So making sure that Saudi Arabia is really keen to bring as much of the supply chain as possible in country. The nature of the PPA, as I said, it's 20 to 25 years, 20 years for wind, 25 for solar. The counterparty is the Saudi Power Procurement Company. and we understand that that's actually, you know, there's a guarantee that's supplied by PIF on the PPA, and that gives investors additional comfort. The tariff is a fixed nominal tariff that's paid on production. So you're paid per megawatt hour that you produce, and you also are compensated for any curtailed volumes, either because of network constraints or because the system operator had to turn you down. So it's essentially a take or pay kind of contract, with, you know, essentially no market risk during the PPA term. Although post PPA, so, you know, we would expect, you know, developers today are assuming for PV, you know, 30 to 40-year life in some cases, so there is significant post PPA value, and that's something that has to be taken account when people are making their tariff proposals. You know, these are competitive projects, and the more, if you can, you know, get comfortable that there is post PPA value to the projects, and that can move your, you know, you can bid a lower tariff and be more competitive for the PPA evaluation tendered tariff. So what's the status of the Repto project? So round one took quite some time to bring forward. So, you know, it actually kicked off in February 2017. So there was round one was a 300 megawatt PV project and a 400 megawatt wind project. They kicked off in 2017, and, you know, financial close was achieved for both in kind of either late 2018 or, in the case of wind, kind of mid 2019. So they've taken a very long time to move from, you know, bid submission to getting to an award stage to moving to financial close. And I think there's been some kind of external factors about uncertainty in the policy framework that have led to some delays. And obviously the first projects are going to, you know, take more time to iron out kind of questions and issues in the documentation, and to get lenders and everyone comfortable that the project is bankable. So these projects did take a significant amount of time to bring forward, but I think the tendered prices that kind of resulted have really made people sit up and take note. So they're, you know, $21 for the wind project and $23 for the solar project. And I think when I compare that to even some of the European renewable tender prices, and I also think about the fact that these are nominal tariffs that are not indexed to inflation, compared to many of the European tariffs that are indexed to inflation, these look even more impressive in terms of the actual level. So that's, you know, created very firm interest from the government in pursuing, you know, further projects. So, you know, what's happening going forward? So Repto round 2 and 3 are either underway or very close to being underway. So round 2 is live, and bids are due in November, December. There's some smaller projects that we would expect to be, you know, not project finance, that are targeting potentially more local companies within Saudi Arabia. And there are some larger projects, 200-300 megawatts in size, that, you know, we're likely to be some of the bigger renewable developers participating and bidding for those. And then there is round 3, which we'd expect to kick off in December, which contains, again, some very large PV projects, and interestingly, an extremely large onshore wind project. So the Yanbu project, which is 850 megawatts, which I think would make it one of the largest onshore wind projects in the world, and that's expected to start in, you know, the RFP would come out in December for that, and will be, I think, of interest to many renewable developers. So, you know, we would expect that there's going to be over 3 gigawatts live in the market by the end of the year, and I think, you know, there's I think over 60 companies pre-qualified. So I think a lot of interest around these projects going forward. So I think the Repto projects, as I said, create a lot of interest. They're highly competitive, and the returns are therefore, you know, very competitive also. You know, we'd expect to see equity returns well below 10%, and because they're significantly de-risked also in terms of the land being provided and the pre-development costs being done. some developers are more interested in getting deeper into the projects and taking on more of the development risk themselves, and private PPAs are a way where that can be done. And so it's worth saying that internationally, private PPAs where there isn't a government-backed off-taker, where there's a direct relationship between renewable developer and consumer, it's a real growth area internationally. And we see that as a potential, and I think Saudi Arabia has the conditions for private PPAs also. If you look at the cost of renewable projects, so obviously, if I look at the left, a utility scale project is extremely cheap in Saudi Arabia, as we've said, but even, a industrial and commercial solar PV project is it's fairly, more expensive because it's smaller, because it's won't have as a secure financing structure, but still it is significantly cheaper than is seen in many other parts of the world, and even the residential kind of projects are going to be more expensive. But if you look at where the industrial tariff is in Saudi Arabia, given that they've removed a lot of the end user subsidy, today the industrial tariff is actually more expensive than even a 1 megawatt INC project. And if you can wheel the power from a larger project, 50, 100 megawatts, then really the economics of a private PPA start to look extremely attractive. And we would expect solar costs to fall further in future, and we would expect retail prices to increase further in future, because there is an ambition to remove kind of subsidies on the gas prices that are currently used in the sector. So we would expect the dynamics of the private PPA to improve over time, and therefore the drivers to be very strong. So there is a framework in place for private PPAs. So today there is an ability to contract directly with a final customer, and ECRA have published use of system tariff schedule that the IPP could pay to Saudi National Grid, Saudi SEC National Grid. Those, I think, have not been really tested in detail, and I think demonstrated, the contracts, and just to demonstrate that the payment flows and everything works, I don't think has been fully established. And I think we would hope, with the projects that are underway now, that would start to demonstrate that this is a viable option. And I think once it is demonstrated, I think this will be a really interesting route to market. And I think really it's, in a way, a first step towards kind of a fully traded wholesale market. If you can have movement, direct relationships between IPPs and final customers, then you're on the way towards having a fully traded wholesale market. So I think it's a really interesting step, and one that ECRA are definitely supporting.
So, other questions? How much time do we have? What's the time here? It's we're roundabout up on time. But there's a question there, Brendan. Does Repto have any plans to tender for storage projects?
Yes, so I think right now, no, not in the they're very focused on wind and solar PV. They have mentioned CSP. I think the focus is on getting wind and solar PV on the system. I think in the longer term, we see storage as a definitely very commercial, especially when you get curtailment of wind and solar. So I would expect, potentially in the coming years, but not immediately. I know it's something also the Saudi Electric have been looking at, and it's possibly that they could bring some projects forward, but at the moment it's a main focus on renewables.
Okay, I mean, you mentioned curtailment there. What sort of levels of curtailment are you expecting in the future in the modelling that we're doing of the Gulf region?
Yeah, so it's an interesting one, because what we see is that we get, because of the low costs of wind and solar, we see that it makes sense actually to keep building even if there's curtailment. So we see, actually, 5-10% levels of curtailment, and there still is, an economic case for those projects. So we see 5-10% curtailment in the future, and actually, that is on an unconstrained basis, and it could be even with some system operation issues slightly higher than that. So it's something that, today renewable developers are protected from it, but under other routes to market, it may become more of an issue and something that people need to keep in mind.
Okay, excellent. Well, I think with that, thank you. I say thank you, everyone. Oh, hold on. There's another question. It's very difficult to see, actually. What is the current renewable target for the next 5? It says next 5 to 10 years. Yeah, 5 to 10 years. What's the?
Yeah, so there's an ambition of 59 gigawatts by 2030, and also there's actually an ambition. I think the number will be in the slide, but it's a very ambitious target for 2023. That I think, so there's, I think the 2030 target is one to look at, and one we think will be met and maybe even exceeded. The 2023 target is quite ambitious, but I think it's of the order of 11 gigawatts by 2023, and that is something that is going to be pushing Repto forward in the coming 2-3 years to continue for a continuous pipeline of projects.
Okay, another question. I don't know if we've looked at it in detail. What's the scope, what's the size of the market for domestic scale distributed solar PV? So I imagine that's rooftop PV on villas, maybe on large warehouse sites, on big malls, etc.
Yeah, I mean, so there's quite a lot of low-rise, buildings in Saudi Arabia. So we haven't actually kind of quantified it, but it will be in the scale of gigawatt size potential. But it's not something that we have a firm handle on. But there's certainly lots of rooftop potential in Saudi Arabia.
Yeah, I mean, it's something we've looked at in detail in Europe, and it was quite surprising. And of course, each country is different. But when we look at Spain, because of the urbanization that's occurring, and because of people living in lots of not high rise, but in city blocks in large parts of the country, that sort of behind the meter distributed PV doesn't have such a big market as the utility scale. And of course, then you have to start thinking about the tariff structure. And a lot of people, compare retail tariffs with the price of producing solar PV on the roof. But over time, what needs to happen is the tariffs need to change, because you still need the system, the distribution system to back up.
And I would say in Saudi Arabia, they're still subsidized. I think the tariffs at the domestic level are still quite low, and it's not viable to a rooftop project even based on net metering. At the industrial level, I think it is, if you can get a big enough site, as the slides were showing. But at the kind of domestic level, there isn't really, even though the net metering regulations are in place, we don't see it as a commercial case. Whereas at the industrial level, I think there is a commercial case for either on-site solar or else even wheeling if possible.
Yeah, there's quite some experience, isn't there? I know Saudi Aramco, for instance, was putting solar PVs all over the car parking spaces a long time ago, and testing different sorts of PV technology in doing that. So there's quite a lot of evidence, I think, of how that could work from different entities in Saudi. Final question here, is Saudi doing anything on hydrogen?
I think at a very early stage, I would say. So, in the last, I would even say 6 months, there's been a lot of talk about hydrogen in the region. But there's no, I think NEOM are looking at hydrogen, which is the new renewable city in the west of the country. I know that Engie are very interested in hydrogen across the region, and have mentioned, an interest in hydrogen in Saudi Arabia. But I think it's at a relatively early stage. But I think, the conditions here for electrolysis as a way of taking some of that curtailed energy and turning it into another energy vector is could be very interesting in the longer term.
Then can you tell us how realistic the PPA price of around, it says here 2.5 cents is for the Engie Nadic PPA?
So I think, the Engie Nadic PPA, I think that's a 30 megawatt project. I haven't seen the tariff, but I understood it was at that level. And I think in terms of realistic, I would believe the project's deliverable at that level, and I believe that the Repto projects are deliverable at that level. It depends a lot on the financing that you put in place and your cost of bringing down your cost of capital. But I think there's a lot of talk about tariffs not being realistic and sustainable. But I think the reality is that we've seen these tariff levels on several occasions across the region, and projects are being delivered at that level, and returns are being seen at that level. I think now you have to say it is a sustainable level and a realistic tariff.
Yeah. Okay. Well, thank you very much. If there's any other questions we haven't answered, please do feel free to get in touch directly with, probably with Brendan directly. You can find him at brendan.cronin at Pöyry.com fairly easily. So, and you'll probably find him on our website as well under the Dubai office if you need to get in touch. And I'll say, well, final thank you everyone for joining. I hope it was interesting and useful, and I look forward to the next webinar on similar topics. Thank you very much.
Thanks, Matt. Thanks, everyone.